Honorable Benjamin Kalu, who is the Chairman, House Committee on Media. You're welcome to Sunrise Daily.
Thank you for inviting me. And viewers, thank you for tuning in.
And Happy New Year.
Same to you.
And we also have with us Dr. Mailafia, who is an economist. Thank you for coming.
Thank you, Mailafia.
On Sunrise Daily as well. Well, yesterday the president tweeted that he's eventually signed the finance bill into law. And for a number of people, this is no surprise. We expected it to kick in this year. However, we see that there are fresh complaints, so to speak. A number of private sector bodies complaining that this is overburdening the private sector with taxes. But there are others who say this is a laudable effort by the government because they haven't seen the tax reforms in a long time. What are your thoughts on this?
Well, it's very welcome. I think it's very welcome in principle because normally when you pass a budget and it is a law, it's an appropriation law, normally there should be a package of fiscal measures that should accompany such a budget. That is standard practice. And in fact, it used to be standard practice in Nigeria until, during the Fourth Republic, we sort of forgot about it. So I think it is welcome. It is very good, except that I have, as an economist, I have difficulties with timing, the synchronizing of certain taxes with a very slow, sluggish, and very dodgy recovery. The normal, principle is that at a time of very slow recovery, it is risky to actually increase taxes. You are likely going to strangle businesses that are just struggling to survive. What you do are those, some of those things that were done for small businesses. That is, you relax some of the taxes, you provide incentives, and you widen the tax base and bring in all those who are outside the tax base rather than increasing the level of taxation, because that is likely to further dampen economic growth. And you need economic growth desperately to create jobs and to eliminate, to reduce unemployment and reduce poverty.
There definitely will be more questions on that because, there will be questions as to whether the people who have been in the tax net are actually being taxed fairly, so to speak, whether they're paying what is even comparable in other climes, for instance, even neighboring Ghana, for instance. But let me ask Honorable Kalu what the thinking was in the House when this finance bill was passed, because one of the criticisms that has also trailed the bill was that there wasn't as rigorous a debate as would have been expected when this bill was brought to the floor of the House.
Thank you, like the economist said, this is very commendable to have the appropriation bill coming at the same time with the financial bill that will help to give will to the implementation of the budget. You recall that when this bill was laid before the joint section of the National Assembly, what was there was 10.33 trillion and a projected revenue of 8.15 trillion, which obviously gives us a wide gap of budget deficit of 2.18 trillion. And the financial bill was needed to be in place to achieve two things. Those two things, scholars have argued that there's, on one hand, revenue generation increase, and on the other hand, creating an enabling environment that will help, to stimulate the economy, for ease of doing business in Nigeria. Like the president mentioned as the objectives of, presenting this bill, he mentioned 5 objectives. One of them was to promote, equity, in the equity in, one of them was to promote, one of them was to increase revenue, another one was to, another reason was to make sure that small businesses were supported. Another reason was to make sure that investment in infrastructures as well as capital market was incentivized. And you find out that the intention of the president in presenting this bill was clear. And when we went into debate, to argue that we did not debate the bill is actually wrong, because all the process of lawmaking was applied in person. You said it was not debated enough. Rigorously. Well, when you mean rigorously, it passed through the Senate. They debated it. It came to the House of Rep. We debated it. And there was also the public hearing that took place on the 19th of November, where the stakeholders in the industry, they were invited to air their opinion, and they actually participated. And at the end of the day, what we have is a wholesome piece of legislation that involves the executive, promoted by the executive, and looked into by the legislative arm, who also incorporated, decided cases by the judiciary. In the course of our discussion, I will highlight some of the issues that we took from the judiciary. So the participation of the three arms of government was involved in coming out with this legislation, and also the public was also involved in formulating this. So it was well done, it was well analyzed before we brought it out. All the processes were followed.
Yeah, one of the major highlights which has been highlighted over and over again is that the VAT, value-added tax, is going up from 5% to 7.5%. If there's anything anybody knows about that, about the finance bill, is that VAT has gone up by 2.5%. Oh, beg your pardon. Yeah, from 50% actually. Yeah, so from 5% to 7.5%. Yes. Now, if that is the case, it would seem that somehow we always take the side that has gone up. We very rarely emphasize the other sides, the positives of it, so to speak. So, for instance, there is stamp duty where right now, you recall that towards the end of the year, there was huge controversy over the 50 naira stamp duty, which people have to pay. Yes. And the CBN insisted that it was 50 naira for every 1,000 naira transaction. Yes. And that people had been paying that for quite a while. But now the threshold for that has gone up to 10,000 naira. Yes. It doesn't seem like there's a lot of talk around that. Yes. That companies who make 25 million naira as cost of their transactions or what have you, COT, will be exempted from company tax. Less than 25 million. Less than 25. Well, so it will be like 25 million and below, right? Yes. That's how that will be calculated. They'll be exempted from company tax. Isn't that right?
No, once they knock 25 million...
Then they have to pay?
They have to pay.
Okay.
But if they knock 24.99 million...
Oh, that's true, because it says here that companies that earn between 25 and 100 million yearly will now pay 20% of their profits as CIT. Yes. Now, we also read that companies that make more than 100 million will continue to pay 30% of their profits as CIT. Now, they will continue to pay. They have been paying. What exactly is the complaint of private sector, of the private sector? Because quite a number of products as well, and produce and consumables have been exempted from the VAT. Sure. Some people will say that there's been due consideration for consumers, as it's only when you're using products that should attract value that you pay the VAT. So what would you say that the complaint is about, really?
Well, the complaint is, is that most of them actually are struggling at this time, especially the manufacturing sector. They are struggling. High costs everywhere. And it looks as if they are being lumbered with so much more. So I think that is the main concern. And like I said, in a time of very slow growth, it's a bit risky to actually increase the level of taxation. What you need to do is to spread the net and keep it at a minimal level, actually to provide incentives for those companies that are struggling to be able to come back on their feet, fully again. And from my humble experience, and I've been on the board of a few companies, it's very tough. It's very, very tough. There's a high-cost environment. The business ecosystem is very harsh. Insecurity everywhere, high cost of energy and the rest of it. So even the big companies are struggling. If you have to fuel through diesel for 60% of the time, you have a very huge bill indeed, and you can't be really globally competitive.
One of the ones that has really caused controversy is the fact that you will now need tax identification number, that's your TIN, to operate bank accounts.
Yes.
What's that about?
Actually, I find that very curious. And it doesn't, from my humble experience, I've not seen that anywhere else in the world except in Nigeria. It doesn't happen in the United States. It doesn't happen in Britain. The thing is that a commercial bank is a commercial bank. They're in the business of looking after the savings of their clients and giving out loans. They are not in the business of collecting taxes. And if I were a bank, to be honest with you, I will do it, but I will be sending the bills to the FIRS to pay me for services I'm rendering to them because,
Are they they're not going to be collecting taxes.
Well, but
perhaps the federal government wants to really know those who own those accounts and know whether they're paying taxes commensurate with their earnings or their...
Well, it will still mean that if they have to check certain things, they have to take the management time of some of those banks. It's not just doing it and so on. There will be issues and they will have to do some work, some paperwork for them and so on and so forth. So they should send the bills to FIRS to pay them. Honestly, that is what I would say.
What was the thinking of the House when, that particular proposal was made?
Well, you see, tax administration in Nigeria, like he was saying before, that we need to increase the base. Instead of increasing the tax, you need to bring in those who are outside the tax bracket, where, most people who are not paying tax are not known. But hardly will you have anybody who is up to the age of paying tax, who is earning income, not having a bank account. The government want to be able to, track them, find out those who are supposed to pay tax, who are not paying tax, and through the TIN, it will be easy for them to administer the collection of tax. Well, his argument that charges should be going to FIRS, for rendering such service, it's a discussion for another day. But for now, it will help the administration of tax in Nigeria to enable people who are supposed to pay tax coming into that bracket. I want to mention something on what he has been emphasizing on there's no need to increase tax. That is sending a bit of a wrong narrative to Nigerians. This particular bill, if you look at it, targeted to protect the vulnerable in our society. Now, the experts like him have always argued that tax should not be a burden on those who are not able to pay, but it should be on those who have the capacity to pay. And what this particular bill has achieved is to make sure that the common man listening to me now, the akara seller, is protected. How? You remember, I was the one who moved a motion for the deduction from the directives from CBN that this deposit, payment on deposit and withdrawal, that it should be looked into. The executive have captured that in the bill that they provided to us. Like you mentioned, this stamp duty is no longer on 1,000, it is now on 10,000. So which means instead of 500, it is now 50 on 10,000. Akara seller who is selling 1,000, 2,000, 3,000, and all the rest of them, who his transaction or her transaction is within that range, is protected. That is one. That is captured in this bill. Another one is the small businesses. like he mentioned, which is also one of the objectives of Mr. President when he proposes, is that support should be given to the small, medium-scale industry. We need to emphasize that below 25 million turnover, you are exempted. You are not going to pay tax. And from 25 million to 100 million, instead of paying the 30% that you usually pay, you have now been given opportunity to save 10%. What you're going to be paying by this bill is now 20% instead of 30%. That extra 10% is going to be used for the expansion of your business. Another one is those who fall under, minimum tax bracket, where, okay, you declared loss, at the end of the year. It has been worked out that what you pay now is 0.5%. So this is actually placing money in the hands of small businesses to make sure that they have more, because like I've always said on this program, that this is the engine room of the nation, the small businesses. The more we empower them, the more they employ more people, because they generate more employment in the country, they generate more businesses in the country. So this tax is on those who are able to afford it. Now, if you go to value-added tax as well, which was also amended, you find out that this increase that we are talking about is not on those entities between 0 naira to 25 million naira turnover. It is entities within that bracket don't pay any VAT at all. So it is those from 25 million up that are supposed to pay. It is also important to note that this particular act expanded the list of exempted goods on VAT. Now, if you had Mr. President, he was saying things like your bread, like your rice, like your milk, and not the rest of them. And also on services, like tuition fees that is paid from nursery school to tertiary institution. You don't pay VAT on it. So who is that protecting? The vulnerable ones in the society. Now, if you also go down, you find out that there are some goods that ordinarily before now, if you're looking at the custom, because this particular bill targeted 7 tax laws in the country. One is the company income tax, another one is the personal income tax, another one is the value-added tax, another one is the capital gain tax, another one is the petroleum profit tax, another one is the stamp duty Act.
Yeah, Customs and Excise Tariff Act.
Yes, that's custom. Now, before now, most of the companies in Nigeria, like the economist was saying, the private sector, they are complaining. But I know there is a part of private sector that are busy rejoicing now. Why? The reason is this particular law has given them opportunity to compete favorably. For example, sizable goods, we usually charge import duty on some of these sizable goods, which when they come into the country, they don't pay that. But those who manufacture such goods, like tobacco, like spirit in the country, they pay those sizable duty. And once they pay that, and their cost of production, it will raise the price of the locally made goods so that it will not compete favorably with the imported goods. That has been eliminated by this particular bill. It means if you are going to import all those luxury products, those sizable products, spirit, tobacco, and the list of them, you are now going to pay tax or duty on them, on top of your import duty, which will make your price higher. And what is it going to do for our economy? It's going to make importation unattractive and production more attractive. And the ripple effect is that the economy is going to be stimulated, more jobs will be created. Now, if you go down also, the insurance sector, they are also in the private sector. The insurance sector before now have been under the burden of, forwarding their losses within 4 years. That has been the position. But now, this bill is saying you can forward your losses up to, indefinitely. No longer the bracket of 4 years. What does that entail for a common man who may not understand the implication of all this? And is that they will benefit from insurance, health insurance, for example. They will have more opportunity to benefit from health insurance because they have been given, a good tax regime for the insurance company. These are some of the things that the sector private sector will be benefiting from. Now, if you also go to the what is it called, if you go to the company income tax again, you find out there is another opportunity created for the private sector, which is what they call excess dividend tax. This excess dividend tax has been there before now. And what does it do? The excess dividend tax is when you declare your dividend and it is bigger than your profit that you declared, you pay tax on the excess. And you know, most private companies accumulate their income, their dividend, let's say 1, 2, 3 years. They accumulate it, and then the year they will pay it, it might be bigger than what they declared as profit that year. And remember, they tax them on profit already. Now, the excess, when they pay dividend, you charge them again. That is double taxation. So what this bill has achieved is to remove that element of double taxation. If you have, taxed them on profit, if you come to dividend, you don't tax them again. So it has eliminated what they call the EDT, excess dividend tax. It has been eliminated. And who benefits? The private sector. So when I hear that people are not rejoicing that it is too much tax, I frown at that. But there is an argument that has been in place, especially for the petroleum profit tax. In the petroleum profit tax, it's 85% at the moment, but this bill added extra 10% on the dividend. And I am now speaking as Benjamin Okezekalo. If you allow me, it is one of the areas of our law, this law, that I would like to review. Every law when made is not in finality. There are still rooms created by our Constitution for amendment. Why do I say that? If petroleum companies make 100% and you charge them 85%, okay? After charging them 85% on profit, then on dividend, you charge them 10% again. That is making it 95%, leaving them with 5%. For me, I know you can tax both dividend and profit, but maybe the rate should be looked at so that it would not be too high, making it about 95%. Those are some of the things that, on the part of Nigerians, based on the outcry from Nigerians, we might be looking into to see how we can adjust them to be able to reflect, what is best for the industry.
Well, you were referring to the objectives earlier of the bill, 5 objectives. The objectives are promoting fiscal equity by mitigating instances of regressive taxation, reforming domestic tax laws to align with global best practices, etc., etc. Now, I was wondering, do you think that in any way, because one of the things we talk about in Nigeria is the gap between the rich and the poor, and we have been told that this tax is for those who have more to pay more and those who have little to pay little. Do you think that this in any way bridges that gap between the rich and the poor?
Well, yes, and before I even make that point, among the points the Honourable listed, we should also not forget digital and e-commerce. This new law actually tries to capture a huge part of that because a growing industry, even in Nigeria. And so in the past, there was hardly any taxation, but now it has brought them into the tax bracket, which I think is a very good thing. Between the rich and the poor, there will always be that tension. And by relaxing taxation for micro and small, small and medium enterprises, I think it is a very good thing. It is looking after the small person, the trader, the market woman in Wuse Market, and the rest of it. So I think it's a good thing. From that point of view. But I think much more institutional support services need to be provided, to the small and micro entrepreneur in order for us to be really talking of equity in the system.
So much more needs to be done in terms of support.
Yes.
Looking at a situation whereby we're also looking at global best practices.
Yes.
Are we there yet with these laws, Or do we still need, I don't know, do we still need a review, as Honorable was talking about? I mean, even though he was very specific about the petroleum tax law, the petroleum sector, do you think that we're where we ought to be with...
Well, I would beg to disagree with him even on the petroleum side, because there are just too many sharks there. Honestly speaking, it reached a point that people were suspecting that the federal government of Nigeria is collecting only 50% of what actual production takes place. We don't have a meter system, unlike countries like Saudi Arabia and the rest of them. We don't have a meter system. It is based on guesstimates. They take your oil and tell you how much they've taken, and then it is on that basis you now calculate what they are supposed to pay in terms of taxation. It's a very iniquitous system. So I have no sympathy with the oil sharks. They should be made to pay more until we can clean up that sector. In terms of global best practices, in fact, this law incorporates new elements of global practices, especially in the area of transfer pricing for multinational corporations. There have been areas where they've tried to incentivize them based on standard OECD global practices. OECD is the Organization of Economic Cooperation and Development. It's a club of the rich people, rich countries, about 23 of them. Based in Paris, coordinate all the activities of the richest countries. And they have a code of global best practices for multinational corporations, for taxation, and the rest of it. And this new law tries to incorporate elements of that in the area, for example, of intangibles. If you've invested in developing intangibles, you are exempt from paying taxation, and also certain management expenses from parent companies that impact on activity on a host country also exempt. I mean, they are tax deductible. So to that extent, I think we are making progress. And even with the 7.5% increase in VAT, we are still better off than many of our neighbors. In fact, in West Africa, in the ECOWAS countries, the average VAT is about 12%, 12 to 15%. So we are still doing quite well.
That's quite on the high side.
Yes.
Trying to imagine going to restaurants and paying 12.5%.
If you go to Benin Republic, Togo, even Cote d'Ivoire, where I used to live, it's very high. But you see, the point I wanted to make generally as an economist is that the general principle is that you don't raise things like VAT when an economy is just struggling, when big companies are even struggling. If our growth rate was over 7%, as it was in some years, I wouldn't mind if you increase VAT to 10%. I wouldn't mind, to be honest with you. But in a time of slowdown and in a time of very sluggish growth, when you increase certain types of taxes, you actually compound the problem of recovery.
But so for me, it's
an issue of timing.
The federal government too has been struggling with revenue, and you know there's a need.
It's a catch-22.
Yes.
It's a catch-22, but you have to err on the side of the private sector, because government is not the engine of growth. It's the private sector that is the engine and locomotive of growth. If you are looking for your own money, and in fact that worries me, because a lot of the VAT, over 60%, will go to states and local governments. And I once, in this very forum, this very studio, described some of them as black holes, where they take in money, and nothing comes out. And you give them more money in a context where they are hardly accountable to their own people. To me, the biggest haram is not even Boko Haram. The biggest haram is when somebody steals tax money. This is people's blood. So when you increase this kind of money and it goes to governors who then use it to build private estates, to me, it's the biggest haram anybody can do. So, yes, we've done it, but let us balance it with respect for the social contract, for public financial accountability.
Fair enough. Let's go to Lagos now. I understand that Chimling has a question.
Yeah, Honorable Kalu, what do you think about, I mean, we know that previously when you hear about payment or adjustment of salaries or maybe for minimum wage, we know the kind of effect it has on goods and services, how sometimes it can be arbitrary, or even when there's a variation in the dollar rate to the naira, we know how that also affects things. But now, OPS, their concern is that when you now raise this to 7.5%, it will be transferred to goods and services. How do you mitigate such? Or what do you think of the impact that that will have on that?
Thank you, Chebelin. There has been this argument. It's one school of thought that says raising the VAT from 5% to 7.5%, that is an increment of about 50%, is going to impact on the input of production. That is one school of thought. But I belong to the school of thought that says this expanded list of exempted items is targeted to help the vulnerable Nigerians that you just mentioned, those people within the lower class. This tax, this VAT, is not for the lower class. All the goods that the essential products that they need on a daily basis, including the school tuition fees of their children, have been exempted. So how is it going to impact on them? And the goods, the companies between 0 to 25 million are also exempted from paying this VAT. And the major companies that the argument is, okay, we are going to, it's going to cost us more to produce what these people are going to enjoy, which is this essential product. Everything about the essential goods, they're exempted, whether it is being produced by a big company or a small company. As long as they fall under that bracket, they're exempted. So I don't think this tax is targeted at the lower class. It is targeted at the middle class and the upper class, which has been the opinion of so many scholars in the tax industry, saying those who can afford tax should pay, and those who cannot afford it should be protected. So this is my opinion on that, that the vulnerable are protected. They should not be afraid. They should not listen to the narrative that says that this is going to be a burden on them. It's not going to be a burden on them. Everything that they need to survive and keep going has been covered by this bill.
So, I'm so sorry about that pause. Just wondering now, I mean, this is where we are. The private sector is complaining. Some parts of the private sector, because we have to be careful, some parts of the private sector also believe that this is a very good bill. You speak to those in tax administration, you speak to those involved in tax administration, and those tax experts, so to speak, they will tell you that this bill is a fantastic, short of selling it as a good tax law. I mean, I don't know if anybody has ever said a good tax law, because, I mean, nobody likes to pay more taxes. But if it is truly protecting the vulnerable, because there is that part which Chamberlain just raised about the companies that are going to be paying these taxes, or those who are going to be paying more as a result of the increase in their own tax, you know, might transfer the cost. So you have to ask the question whether indeed the vulnerable has really been protected here. However, I don't know if you want to quickly respond to that.
Yes, indeed. Let me respond to that. You see, in economics, it is sometimes said that the only thing you are ever sure of in life is death and taxes. These are the two things you are 100% sure of. But my honorable here, with all respect, he was waxing lyrical about how fantastic this bill is for the common man. Forgetting that there is such a thing called behavioral economics. In fact, it's a new field of economics called behavioral economics. That it is not just demand and supply and that leads to an equilibrium. it can sometimes lead to disequilibrium. And this is how it works. You simply increase taxes or even reduce subsidy on fuel, and the woman selling akara, who has nothing to do with it, increases her own cost too.
That's why we are here to explain.
So this is what you are going to see. The general VAT will spread all over. The man selling cloth, wrapper in Alabama market, the woman selling wrapper in Alabama market will increase her own. So that behavioral thing is going to snowball.
And it's very common in Nigeria.
That is how it works. And you have to always factor that in. And in the end, it will affect the common man.
But that is why the Orientation Agency of Nigeria, the Ministry of Information, this kind of engagement, which I commend Channels TV,
yes.
you know, arranging platforms like this for us to communicate to the common man, to remove the fear. There is this phobia around tax. And if we break it down, they will see, if they notice that they are safe, they are covered, that behavioral reaction will no longer be there. The problem in Nigeria is that we don't take time to communicate. National Orientation Agency, and this message goes to them, they have a job to do. Most of the agenda of the government, they are nowhere communicated to the common man. And that is giving room for a lot of misunderstanding. And I am, like I speak for the House, I look for platforms like this to be able to interpret to Nigerians, in minute details, what the steps of government, especially as it concerns the National Assembly, means to them. And this law is fantastic. That is the truth. I said it to you off camera, and I'm saying it again. It's fantastic. You talked about new innovation and joining best practices in the world. Before now, there's been a problem with stamp duty on electronic documentation. Now it is happening. Stamp duty is now charged on electronic document. It is part of this law. This is what is obtainable all over the world. Now, if you go to CAC and you want to register a company, online you do all your application, and you don't need to take it to the office, and you pay your stamp duty based on that. And going forward as well, going forward, the email, overseas, you can sit in the comfort of your room and prepare your tax, and without a third party, without a middleman, get it across to the regulatory body, the tax regulatory body, and they get you the amount you're supposed to pay. That has been introduced by this particular law, where we can use email in line with the provision of the Evidence Act 2011, which also took in electronic document as being evidential, as admissible. So this is, we are going somewhere. Now, there's another thing I missed.
Honorable, I'm afraid we have to go now.
Okay.
Any more talk, you have to pay for the talk time. I have to thank you gentlemen for coming on Sunrise Early this morning. Thank you so much for sharing your thoughts with us. Honorable Benjamin Kalu is the Chairman, House Committee on Media, and Dr. Mailafia is an economist and former Deputy Governor at the Central Bank of Nigeria.